is that our politics is very polarized right now. This is not like 1994 or 96 when you had people like Bob Dole and so forth. These were sort of centrist Republicans who were willing to reach across party lines to make a deal with, again, a somewhat centrist president, Bill Clinton. We're now in a situation where both the major parties in our countries have moved further to their own extremes, and it will be more difficult to make some of the tough decisions that they need to do to try and solve some of these problems. Next slide, please. This will be the last slide I show you because I know that a lot of people want to think about their own state's finances. We've been thinking a lot about this at The Economist. What is the risk that we end up with some kind of financial crisis engulfing one of the states? Now, I actually originally done this analysis earlier this year, and it was much more interesting back then because actually at that time, California, Illinois, and Michigan had wider credit default swap spreads than Ireland or Portugal. The credit default swap spread is basically the price of insurance on a default. If you buy a credit default swap and you own a bond of California, then you've bought insurance against them defaulting. So obviously, the higher that number is, the higher the risk the investor perceives of a default. And as I was saying earlier this year, there was actually higher risk attached to these states defaulting than to Ireland or Portugal. Now, it's not quite so bad now, but not because anybody thinks California, Illinois, or Michigan have gotten safer, but because Greece, Ireland, and Portugal have suddenly gotten a lot more dangerous. My point is that, I mean, we have very dysfunctional politics at the state level. We have a severe lack of room to maneuver in terms of ability to raise taxes or cut spending because they're locked into things like Medicaid mandates and state pension employees and so forth. So one of the things I worry about is, some kind of an accident happening to one of the states. Last slide, please. And finally, my sort of shameless self-promotion. The book explains it all if you want it, or not. Anyway, I'm going to stop talking now. We have, 10 minutes for questions? Yeah, a couple of questions. I'm sorry I went through that pretty fast. Hope I didn't make it too hard to understand, but would love to respond to any questions or comments you want to make. Yes?
Two questions, actually. One on prospects back to inflation, prospects for future inflation.
Sure.
What about when the velocity of money picks up again? With all the paper money, fiat money floating around, what then?
Sure. So the question is, what happens when some of that money that's sitting around in the banks actually starts to get out, lent, and spent? That's basically your question, right?
The velocity.
So that's a key question. I'm not too worried about that. I believe the Fed has the ability to make sure that that doesn't happen. If we're in a situation now where the economy picks up and the demand for loans picks up and banks are tempted to turn all that money into loans and that starts to create an overheating situation, then what the Federal Reserve can do is that they now have various abilities to raise interest rates in such a way that it actually discourages the banks from lending that money out. The way the Fed works is they don't really worry too much about the size of the money supply. They worry about the price of credit. So as long as they can control interest rates, they feel they can keep that money from getting out there and causing an inflation problem. And I happen to think they're right. So I don't worry too much about inflation really in the next 4 or 5 years. I worry more about it over the next, say, 10 to 20 years because, let's face it, I mean, we have some severe problems, a lot of debt this country has taken on. And with sort of sluggish growth outlook that I'm laying out for you here, we're not going to pay it down in a virtuous way real fast. Those debt burdens are going to continue to grow. Now, how do countries get out of debt traps like that? Well, there's several ways. One is austerity. We raise taxes and we cut spending. That's what we did in the early 1990s. It's what other countries like Sweden and Canada and Denmark have done. So it's what I hope we do. But what are the other ways? One is to inflate your way out of the debt. You basically twist the central bank's arm into holding interest rates lower. That gets inflation up. That enables you to pay the money back with diminished dollars of diminished value. And the third way is default. I don't happen to think the United States will default. We have a 200-year, history of paying our debts. It's one reason why we're able to borrow at such low interest rates now. Moreover, I think that if we were to get too worried about these things in the next 2 years, we might actually do some damage. In other words, this is kind of like the St. Augustine issue, right? Lord, make me chaste, but just not yet. So you want to be able to actually have the ability to borrow the money now and stimulate the economy a little bit now. But you want a plan, like a 5 or 10-year plan that once the point of maximum risk has been passed, you start to get that deficit down and you control the runaway path of entitlement spending on Medicare and Medicaid and social services. And I worry that we don't have that. And I don't even see the will to address that, not in either party. I mean, it's kind of a sad thing when, you know, Obama like basically punts the whole question to this deficit commission. I mean, a Hail Mary pass if I've ever seen one, to try and like come up with a decision between essentially today and December 1st. They're going to they're trying to thread this needle where it reports back right after the midterms, you know, and after the election campaign, we've had, you know, Democrats and Republicans are going to join hands and sing Kumbaya and say, yeah, we're going to raise taxes and cut Medicaid and Medicare. I'm sorry, so I worry a little bit about that. So I don't see an inflation problem in the next 4 or 5 years, but I do worry that over the sort of the 10 to 20 year period that, I mean, inflation tends to have a very long fuse once it gets, you know, so that's why I'm not worried about it for the next few years, but I do worry about that 10-year scenario.
I did have one other question.
Sure, yeah.
That segues in from what you related about interest rates as being the major tool to fight inflation. Since our country's finances are in such a mess, by that I mean a lot of short-term government debt. We're not long-term like the British. What's going to happen when we start, any answer to the Fed refining the liability side of the balance sheet?
Sure. It's funny you should ask this because actually I'm in the middle of a project right now to write an article on this very issue, right? I mean, one of my lines in my book is that, so like, depending on short-term debt is like having to reapply for your job every 3 months. I mean, it's kind of like an anxiety-ridden existence when your ability to stay afloat, you know, comes up. It's going to be tested every few months. Yes, the United States had an enormous increase in the reliance on short-term debt for a while in the midst of the crisis. Now, the good news is that the Treasury Department has made a very concerted effort to try and change that. The vast majority of the renewable borrowing the last few years has been along at 5, 10, 20, 30 years, and so forth. So they're starting to get the average term to maturity down. Oddly enough, it's a problem that most countries have. You pointed out the British, they do have a very long term to maturity, but they tend to be actually rather unusual in that regard. Most countries have this same problem. But I do worry about that. I don't worry so much about this creating a problem for the Fed. Yes, you can imagine a scenario where like you hold a bond auction and nobody shows up until they force the Fed to buy the stuff. They seem to be running things pretty safely, though, that won't happen. And indeed, it's actually the very fact that you know the Fed could, if it had to, buy the debt, that encourages people to show up. Because you won't have an event like you have in Greece. One of the main problems Greece had a crisis is they don't control their own currency, right? The European Central Bank does, and they can't push the ECB around. It also means that they cannot actually push the currency down and gain an export advantage, which is also one thing countries often do, is that by depreciating their currency, their economy booms because they export more. That was not available to the Greeks. Yes, sir.
All business needs a customer base, as we all agree, I think.
Yeah.
Is the emerging, well, let me put it this way, Western countries don't even reproduce themselves anymore.
You mean because
the
of the demographic problem?
United States is en route. It barely does it. The Muslim nations and Chinese are trying to stop it, as you all know, even though they say they're not anymore, but they are. Who's going to buy the products if we can't even reproduce people to make the products, sell the products, and use the products? And is that going to be the answer? Well, we'll create a global economy with emerging markets, and we'll have all these poor folks buy the products, but if they don't have any capital, how are they going to buy the products?
Okay, so a couple of things. First of all, recall the chart that I showed of what's happened to Japan. You know, I mean, Japanese are obsessed with this question. They like to say,
good example.
They say that it's a popular exercise to actually compute the actual date on which the very last Japanese person will be born. Now the good news is that the United States population growth rate is actually one of the highest in the OECD. I mean, our fertility rate is now around 2.1, which is exactly replacement rate. Now you add to that immigration, and so our population is growing. Now China, because of their one-child policy, is staring at this terrible demographic cliff. Their population growth has already slowed to a halt. and their working age population will start to decline in about 5 years' time. So Asia actually has got a much worse demographic profile than we do. South Korea, I think, has the most rapidly aging population in the world. It's not so bad in Latin America, not so bad in India. Now, your question was, who are we going to sell to if this population isn't growing more? So the first thing I'd say is that the United States will have a growing number of people for quite a few years yet, unless we really, really severely, clamp down on immigration. So I'm not too worried about that. But the other thing is that in China, even though their population is going to stop growing, each person is getting quite a bit richer every year. Just as they become smarter, they spread a lot of the productive techniques that all they're doing is adopting from us. And so you can sell to a country either because there are more customers or those customers are becoming more affluent. And that's exactly what's happening in those countries. Those customers are becoming more affluent. And what we've seen from the history of the last 50 years is that as people become more affluent, they want more choice. They're no longer satisfied with just the 2 local brands of milk or cereal. They want to try the stuff that we try. They want to drive the cars that we drive. And so I don't worry so much about the point that you're making. I think that there are reasons to worry about the demographic things. It's not so much because I think businesses will lack customers. It will be because we and the Europeans and the Canadians have put in place these extremely expensive safety net retirement programs in terms of pensions and Medicare and so on. And we will not have the young workers to pay for those pensions when the time comes. So it's a big problem. So I worry about that, but not for the reasons that you've just raised.
One more question,
Okay.
and then Greg will be around for
Sure.
a while afterwards.
Yeah, sure.
With the rise of emerging markets, do you ever see a time, and a certain amount of nationalism that you see in places like Russia, do you ever see a time where the U.S. dollar becomes under siege or replaced with another currency?
It will eventually happen, but I don't think it will happen soon. And indeed, I would say the events of the last year has actually pushed that date off. So think about it. Why do foreign central banks hold the dollar as a reserve currency? They're not trying to do us any favors. When they hold reserves, it's the same reason you and I have a money market mutual fund. It's not for the yield. We just want cash in a hurry. And you can't get that kind of liquidity with anything except dollars and treasury bills. What are you going to put in the euro? Well, if you own a Greek bond, do you think you're actually going to get euros back in 10 years' time? Not so sure about that. So what else are we going to turn to? The Japanese yen? The economy's a little bit too small for that. Canadian dollar? I love Canada, but that leaves the yuan, right? China, because China is the next growing country. Well, here's a problem. The yuan's not even a convertible currency. You can't even buy it without the Chinese government's permission. As I like to say, having your savings in yuan would be like having a central bank's reserves in yuan would be like me having my savings in frequent flyer miles. It's just not the most flexible sort of resource. So I think the dollar is going to be number one for a very long time. It's not something I lie awake worrying about. The United States has a lot of problems, but I like to say that if you read The Economist, you realize we're sort of like the least ugly child in the room. Is that our problems aren't that bad compared to some other countries. And I will add that this is a subtle thing. It's very important that the United States has this political stability, rule of law. You know what I mean? Right? In China, if you happen to go on a business trip to China on the same week that your country gets into a dispute over boundary waters with China, you can find yourself in jail over trumped up charges. That doesn't happen in America, right? And that the rule of law is one of those subtle things that we take for granted, but it's so important, such a powerful advantage for this country, and is a very powerful advantage for investing here.
Thank you, Greg.
Thank you.